What advice do you have for somebody applying for a personal loan to try to consolidate their debt?
So again, there are lots of options. That's the most common, of course, is a debt consolidation loan offered through your financial institution. So I would say just like with any other credit product that you're applying for, any other loan you're looking at, just make sure you're reading the fine print. So be aware of any fees that are going to be tied to this loan. Make sure you're aware of the interest rate. Obviously, if this is going to be a monstrous interest rate and it's going to be higher than what you're already paying on something, just for the sake of organization, obviously wouldn't recommend that if it's not actually going to be saving you on interest in the long run. And then a final thing that I always make sure to look out for if I'm ever looking at loans or advising other people on loans is just to make sure there's not a prepayment penalty. Because if you are trying to tackle this debt, which is, why you're here today, and you're trying to get it all paid off, then you don't want to be penalized for doing so early. Welcome to the Money and More podcast. I'm Madison Foster.
And I am Ryan Bowling. And today we are talking about 7 strategies to pay off your debt without losing your mind. You wrote an excellent blog article that is up on the Money and More blog. So let's jump into our 7 strategies for tackling debt. Tell me first why you wrote this article. What was it personally about this that appeals to you?
Well, I think ultimately my goal with all of these articles that I write is just to do something that's going to be truly helpful for our readers. And I just thought this was something that was timely. It was topical. Most of my friends, some of my family have all mentioned either struggling with debt in the past, currently struggling with debt. I've had my share of debt being a college student, having credit cards, going through life, all the things. And so I just thought that it would be helpful, honestly, for people to see, not only can you get out of it, but some actual real world tangible strategies to do so a little bit quicker without just having to, sell internal organs or have 15 jobs. So I thought we could explore some alternatives as well.
Yeah. So obviously being in banking, we deal a lot with, financial matters like this, but writing about them is a different story. So what was a little bit of the research you went through when you were putting this piece together?
Yeah, so some of these strategies I was already familiar with. There were some concepts that I took from Dave Ramsey. He does a lot with debt work in particular. So especially like the debt snowball method, that's something that he teaches about a lot. So some of it was stuff that I was already familiar with. And then I also just kind of did a deep dive on the internet as to some other creative solutions so that we can really meet people wherever they are in their debt journey, whether they're just now wanting to get out of it or they've been struggling to get out of it for years and it's overwhelming and they need additional help. I just kind of wanted a little something for everyone. And so I combined my personal experience, my personal strategies with pre-existing information, and then also just good old-fashioned internet.
Yeah, absolutely. So dive into the first strategy you want to talk about for this.
Yeah. So first one is the one that I just mentioned a little bit, and that's going to be the debt snowball method. So that one is essentially where you tackle debts in order of smallest to largest dollar amounts. So essentially, if you have 3 different loans, you're going to make minimum payments to the 2 highest, throw as much extra money as you possibly can at the smallest amount until you get it paid off while continuing to only make minimum payments on the other 2. And the reason for that is you don't want to stop making payments on those 2 larger ones altogether, because then you're going to incur late fees. Those debts can go to collections and it's a much bigger deal. So you do have to continue making minimum payments. I want to make that clear, but you want to throw all of your extra money that you have towards that smallest one until it's paid off. And then at that point, you take all of that extra money you were throwing towards the smallest one and then begin applying it to the second debt while continuing to make minimum payments on the third. And then you keep going in that order until then they're all paid off. And the reason it's a snowball is because you're getting traction as it's going. And so you're able to take extra money that you're saving from interest by getting these paid off in order until eventually you get them all paid off from smallest to largest dollar amount. So that one's a really good one for people that need a little extra help staying motivated, because it's really rewarding to get to see debts be paid off at all. And so if you're starting with the most easily attainable one, it's a lot more doable if you're just paying off a $500 balance on a credit card rather than trying to tackle $20,000 worth of debt all at once. And so it's really good for people that may need a little bit more motivation to see that you can get one paid off, and then you can just kind of start to go strategically to get the rest.
Yeah, this one, I think, practically speaking, makes a lot of sense in the realm of student loans. So if you weren't one of the lucky people to have your student loans forgiven, I think it makes a lot of sense for people who would have taken out a few small student loans, like if it was for either a lot of textbooks or anything you would have used a student loan for, and say if you were in school for 4 or 5 years, you've got a couple of your loans that are maybe just $5,000 or $6,000 and a few that are bigger. Obviously, start with the smaller ones, wipe that out, apply it to your next biggest one, and so on down the road till you get those student loans hopefully paid off. But how is this? Obviously, you have people with mortgages. How does it fit into some of the larger payments? Because not all debt's created equal.
Right. And so that's a great example as far as mortgages. I would say that the vast majority of people that have a mortgage payment, that is not the only payment that they have. So whether it be a new car that they just bought and they're making car payments, or they do have credit cards. Usually when you buy a house, then you got to get all the new appliances, furniture, all of that. And so typically one debt comes with another. And so I would say for the larger payments, that's again kind of why it's helpful, because first of all, if you have a mortgage and any other debt, that seems incredibly overwhelming just by nature of how large of a dollar amount a mortgage loan is going to be. And so when you see a $200,000 debt, and then you also have these other credit cards or student loans or an auto payment, it just can honestly feel incredibly overwhelming and just like nearly crippling. And so by getting the others paid off, it does make an otherwise large mortgage payment seem a lot more manageable. And that's kind of the beauty of it, is that by taking those smaller ones and paying them off, you do have extra money to throw towards that mortgage at the end if that's your largest one. And so you can get that paid off faster as well. And then also breathe easy that you don't have these other debts at the same time.
So I personally am a debt snowball strategy person. That's what I've employed in my personal life. Back when I was getting out of college, I had some credit card debt that I needed to tackle. I used the snowball method, and I can say, obviously, it has worked for me. I think it can work for a lot of people, but that's just one strategy. Lead us into strategy number 2.
So the second one, we're going to stay in the snow theme here, and it's going to be the avalanche method. So it's going to be similar to the snowball method, but a little bit different application. So you're still going to go in order, but rather than go in order of the dollar amounts of your debt, you're actually going to go in order from largest to smallest interest rate. And so the reason for that is if you're saving money on interest by getting the debts with the largest interest rate knocked out of the way first, then again, that frees up some extra cash for you to put towards payments on the others. So you're going to go, again, in order of largest to smallest interest rate on this one.
So I was doing a little bit of research before we jumped in here, saw the average credit card interest rate right now, just under 23%. So I think clearly your credit card interest rates are going to be the highest. Households carrying almost an average of $10,000 in credit card debt every year. So what advice do you have for those people trying to get out from that literal mountain of credit card debt?
Yeah. Well, again, just know that you're not alone. Literally hundreds of thousands of people have debt in the United States. And if anything, the debt problem is just getting a little bit worse, but there's definitely hope. And like you said, Ryan, the avalanche method is one that I love for credit cards in particular, just because, like you said, the average interest rate on credit cards is absolutely staggering. And so if you're able to knock out the largest ones first and get those down to a zero balance each month, which should be your goal anyway. But of course, emergencies come up if you have to use it for something and you have to carry a balance on multiple cards, then you want to get those taken care of so that the interest isn't just weighing you down for years and years and years, because it can really get out of hand fast. And so if you are starting with those with the largest interest rate, then again, that frees up extra money that you were throwing just towards interest for you to make payments towards the other cards that have a little bit lower interest rate, and then get those all paid off strategically.
So getting out from your credit card debt, obviously a good thing. Lots of pros to like about the avalanche method, but what are the drawbacks? Does this have any cons?
I would say probably the largest con, depending on how you treat your credit cards and your finances, is just I know that when I have utilized this in the past for credit cards, it was difficult for me not to make the largest payments that I realistically could on every single card. But you just have to keep in mind the bigger picture here. So even if it feels like you're not getting anywhere because you're just making minimum payments on, these other four cards, if you're making larger payments on the one with the largest interest rate, you're saving yourself potentially thousands of dollars in the long run. And again, you don't have to make minimum payments forever. The goal here is to free up money so that you can then pay those other cards off. And then the ultimate goal is to get out of that debt altogether so that they're all just sitting at a zero balance and you can just kind of utilize them the way that OMB Bank recommends, which is just to pay them off every month in full and not carry a balance on credit cards, because they absolutely can be great. There's cards with rewards. You can do travel, you can do points, you can do cash back. Like, we're certainly not against credit cards in particular, but you just want to make sure that you're not carrying a balance on those month to month.
Absolutely. It's a strategy, and like any strategy, really, it takes discipline in order to do it, and maybe a little bit of planning ahead so that you can make sure you've got money where you need it. It's going to the right place, but really, like anything, it's just a strategy to try to get to the other side of it. But that leads us into the third strategy on our list. Take us through that one.
So number 3 on our list today is going to be debt consolidation. And that can mean something a little different to different people depending on your situation. But at its core, you're basically just putting all of your debt into one lump sum, getting it all together so that rather than make 15 different payments on 15 different loans, credit cards, whatever your debt may be, you just have one large sum and you're making one monthly payment. So for people that struggle a little bit with organization or tracking, or they don't want to be making different payments to different companies and this credit card here and this student loan, by consolidating it all, you're just going to have one monthly payment. You're going to know what it is. You're going to be making it to one entity, financial institution. And that's a little bit easier to keep track of. And it can also, in that same way, feel a little bit less overwhelming, just because, yes, it is going to be a higher payment and a higher amount depending on what all of your debts amounted to. But it does feel a little less stressful for most people than trying to make several different payments all at once.
So a lot of banks, other financial institutions, they'll offer this in a personal loan. What advice do you have for somebody applying for a personal loan to try to consolidate their debt?
So again, there are lots of options. That's the most common, of course, is a debt consolidation loan offered through your financial institution. So I would say, just like with any other credit product that you're applying for, any other loan you're looking at, just make sure you're reading the fine print. So be aware of any fees that are going to be tied to this loan. Make sure you're aware of the interest rate. Obviously, if this is going to be a monstrous interest rate and it's going to be higher than what you're already paying on something, just for the sake of organization, I obviously wouldn't recommend that if it's not actually going to be saving you on interest in the long run. And then a final thing that I always make sure to look out for if I'm ever looking at loans or advising other people on loans is just to make sure there's not a prepayment penalty. Because if you are trying to tackle this debt, which is, why you're here today, and you're trying to get it all paid off, then you don't want to be penalized for doing so early. So I would say most loans do not have a prepayment fee, but some do. So if they are going to penalize you, just make sure that's something you're aware of. And if there is a prepayment penalty, that you're comfortable with whatever term you're locking yourself in for. Otherwise, if there's not one, you're able to pay it off as early as you'd like with no fee.
Well, that's a great point. People often forget about that one, but like anything, read the fine print, and that sometimes that shows up in there. So strategy 4, this one I personally think is the most difficult one. But take us through the 4th strategy in your list.
It is tough, yes. So that one's going to be cutting unnecessary spending. And again, this is going to be unique to the individual, but it's something every single one of us is guilty of. There's always fat that can be trimmed. So again, this comes down to budgeting, which is another thing I am a huge, huge proponent of, is just budgeting and telling your money where to go each month. And oftentimes by creating a budget, you're able to see where a lot of this unnecessary spending is going in your household. So for a lot of people, it can be having food delivered instead of cooking, just for convenience sake, going out to eat a lot, having a lot of different subscriptions for movie, TV, video game services, those types of things. And so for a lot of us, if you really examine where your money is going, there's almost always something that can be eliminated or at least reduced. And then you can take that money that you had been putting towards your debt, which will then get it paid off faster. It's just a matter of self-discipline and being willing to give up something temporarily for a little bit of long-term relief and satisfaction later on. But it's not going to be instant gratification, which I think is what a lot of people struggle with.
That is certainly me. I know my pleasure is certainly going out to eat for lunch. I do it way more than I should. But if you could give somebody one tip on something they could do now to reduce that unnecessary spending, what's that advice?
I'm going to say kind of twofold here. So first of all, I would honestly advise against cutting out something completely. So if you do really, really, really like your morning Starbucks run, you don't have to never go get coffee again, because oftentimes that can lead people to feel deprived, discouraged, and then they kind of give up on their debt payoff journey altogether. So I wouldn't say you have to completely deprive yourselves of the things that bring you joy. But my biggest recommendation here would just be honestly to take a month and go through your online banking transactions and add those all up, whatever it is for you. So, if it's a video game subscription, see how much you're spending on games, see how much it is month to month, add up how much you're spending on it in a month. And I think for a lot of people, it's a little bit eye-opening because most of us don't realize, like you had mentioned, I think that's something that we are all guilty of, is going out to eat more instead of just packing our lunch when we go into the office for work or whatever that may be. And I think sometimes if we take the time to really add up how much of our money is going towards that each month, it makes it feel a little bit more doable to cut some of that back, because oftentimes we don't even realize how much we're spending on those things to begin with.
Yeah, that's the one place I think I could see the most improvement. I know for myself, and I think certainly my wife would probably appreciate it too. But we are more than halfway through the list. Strategy number 5. Tell us about it.
So this is one that I'm a big proponent of as well. It's something that I have personally done, which is to increase your income. Obviously, we all want to do that. And again, it looks a little bit different. So there's several ways you can accomplish this, but this one is one that I would say is very doable for most people, whether you're a stay-at-home parent, whether you already have a full-time job. Again, maybe not the most fun thing in the world for a while, but if it's helping you get towards your goal, then I would just, say to stick with it. So increase your income can look like a lot of different things. An obvious starting place is if you already have a full-time job and you have this type of relationship with your supervisor, then ask for a raise. The worst they can say is no. I'm a big fan of just asking for what you want in the workplace. And so if you are a hard worker and you've been there a little while and not a raises or something that they offer, just sit down and have the conversation and ask for the raise. Go over what responsibilities you're doing. Sometimes it's helpful to pull information about similar jobs in your area to see what they're paying and if you're currently being paid fairly for the work you're doing. And that's a great starting place because it doesn't require you to have a second job, anything like that. It can kind of just start with where you're at. And that's a good starting place that I recommend, is to just ask for a raise. And then otherwise, getting secondary sources of income. So that can look very different as well. If you're someone that is able to and has the time capacity for another job, a part-time job on the side, whether it's the evenings or the weekends or whatever that may be, that's certainly an option. And the important thing to remember is that if you're getting by on whatever income you have now, anything additional can all be thrown towards your debt. Because if you're able to survive and pay your bills and take care of yourself and your family with what you're currently making, anything else is just extra. So all of that can be the debt fund and get it paid off even faster. But that's just a very important thing that I like people to remember, is don't take all of this money and just treat it as fun money now that you have extra income coming in. We have to keep our goals in mind here. So make sure that if you are going to the trouble and the time commitment of a second job or whatever that may be, you are putting it towards what you intended, and you're not just getting yourself in further debt by having more income coming in.
So I got a couple of personal stories as it relates to this one. So a week or two ago, I went to a what they called a Think Summit, and one of the speakers was a lawyer who was running a major utility company. He talked about the art of negotiating, and his advice when you want to negotiate a pay raise was not to split the difference. And what he meant by that is, so say you currently have a job and you're making like $60,000. You want to raise up to like $66,000. and they come back and offer $63,000, don't split the difference with them. You should actually counter with an odd number, because an odd number will show that you have done some sort of calculation and it's more of an exact figure. So your not splitting the difference should be something more like $64,900, so to speak. It will throw them off guard a little bit, and it makes it seem like you actually did some research and there was a reason for it, because it's more specific than saying I'll do $64,000, so to speak. So don't put zeros on the end of it. Make it an odd number, was his suggestion.
I was going to say, yeah, I love that. And I think that that's a big piece. And from my personal experience, the more informed you are going into those meetings at your workplace or asking for a raise, the more research you've done, the more you walk in with confidence. Those things all really do make a difference. And so I think that's great advice.
Yeah, absolutely. The other thing I did several years ago, so I'm a bank marketing professional, I decided to get a certification in that through the American Bankers Association. So after I sat for the CFMP exam and I passed that, I went to my supervisor and said, hey, I just got this accreditation. I think it's worth 10% more, and laid out all of my reasoning behind it. And you know what? They agreed. And it wasn't part of my annual review. It wasn't something that they had even budgeted for. It's just something that I was determined to do. And then I sat down and I showed them the value in it, and somebody agreed. So sometimes that's all it takes. Obviously, I've done things in the past, freelance work, whether it was, social media on the side for nonprofits. But sometimes all it takes is just going into your workplace and saying, hey, this is the value that I provide. And like you said, the worst they can say is no, but oftentimes more than we think, because it's an uncomfortable conversation to sometimes have, but say, hey, this is the value that I think this extra work has provided to the company, and here's how I'd like to be compensated for that. And oftentimes that goes better than you think it will.
Yeah, absolutely.
All right, that takes us into strategy number 6. Tell us about that.
So I love this one. It's very short and sweet, and that is just a matter of automating your payments. So essentially what I mean by that is just going into your online banking. So like with the OMB Bank mobile banking platform, we have this capability as well. And you can just set up recurring bill pay or automatic payments between your accounts. So if you have these, different debts, however many there are that you're needing to make payments on every month, it's easier once you've budgeted for your, of course, necessities, whatever extra money you have to pay towards these debts, just set them up recurring each month to go towards those payments. So it's kind of out of your hands. You don't have to remember to make a bunch of different payments. It's set up already within your online banking platform. And then the same thing I would say for saving as well. You can automate transfers between your different accounts. So if every time you get paid, you want to put $50 in your savings account so that you can build an emergency fund as you're paying off these debts, which is another thing that I highly recommend. You can set that up as well. And it's just kind of out of your hands. You don't have to worry about remembering to do anything. And that's kind of the beauty of automating those, is that you're a lot less apt to miss that money if you never really had it in your hands to begin with. So if it's automatically going out on those paydays and going towards your debts and going into those savings accounts, you're not so much going to miss it because it's just kind of already happening behind the scenes and it's being taken care of for you. So I'm a pretty big advocate of using your resources, using technology, using your mobile banking app to take care of all that and assist you as well.
Yeah, I have almost all of my payments automated so that I, one, don't have to remember to make them. That's really helpful for somebody like me. Two, I also automate savings. I think that that's one thing to not forget about. Sometimes I treat savings as its own bill. I'm paying myself, so to speak. So I will automate first to have a portion of my paycheck go straight into a savings account, pay all the other bills after that. So is that something you try to do?
I mean, I'm a huge fan of paying yourself first. I think savings are important no matter what stage of life you're in. If you're paying off debts, if you're already debt free, always prioritize savings with whatever you can. So I would say that's an excellent practice for sure.
I think that's one piece of advice my mom gave me after she watched an episode of Oprah a long time ago. Oprah told her to pay yourself, and if that's what Oprah says, then it's got to be right.
Yeah.
All right, last strategy number 7. This one people don't think of as often, but I think it can really make a substantial difference in your life. So go through it.
So number 7 on our list today, last but certainly not least, is just honestly to ask for help when you need it. And just like all of these, that looks different person to person. So for you, if you are a college student, that might mean having an honest conversation with your parents that, hey, maybe I'm not ready to have credit cards. And hey, these student loans are feeling a little bit overwhelming. Like, what other options can we explore? Can you help me apply for more scholarships or grants that you don't have to pay back? If you are older in a different phase of life and it's not a conversation to have with your parents, it may be one to have with your spouse or your friends and family, or sometimes it's real tough conversations that you have to have with the people in your life, but it may even be as simple as telling your friends, setting some boundaries. Like, I can't go out to eat on our once a week dinner date anymore, but I'll absolutely do once a month and I can't wait. And more often than not, even though those conversations are scary, those people will be supportive and understanding. It's just oftentimes you don't know what someone's going through and you don't know that someone's struggling with debt. And it's just so much easier to say yes to everything rather than ever say no. So I think starting with your people in your circle is a great way to ask for help. And then, of course, there's also professional help that you can go to. There are credit counseling agencies that specialize in this exact thing. There are debt relief companies. I would be very wary of recommending that first, just because, just like anything else, not all of them have the best intention. So it's just, I would say, research before you go through credit counseling, before you look into any debt relief or debt consolidation through a professional firm. Look up the Better Business Bureau ratings, look up real life customer reviews, look up how long this company has been operating. And again, before you sign up for anything, before you pay for any service, before you agree to anything, read the fine print. Make sure that they are not killing you with fees. Make sure that you're not signing up for some sort of program you're not aware of. There are absolutely very helpful and good companies that, again, specialize in this exact thing, but there are also some bad ones out there, just like for anything else. So I would just say, before going down that avenue, just make sure you have absolutely done your research and you feel very confident and comfortable that this is a reputable company, that you feel good putting some of this into their hands, because it is a very sensitive and personal topic. And so you just want to make sure that you have the right partner in your life. And again, that can look like a team of people. It can be your spouse as well as some credit counseling. But just make sure you're doing your research ahead of time so that you can really set yourself up for success.
So we both, obviously, we work for a bank, and sometimes your banker can also be that sort of resource. What advice could a banker give somebody who's looking to get out of debt?
Yeah. So honestly, we have a great list of options here. And I think it's definitely not a one size fits all. So I think if you just sit down with your banker and they are able to look at your unique financial situation, see the amount of debt you have, what those types of debts are, then they'll be able to kind of give you a starting place. So your bank may already offer a solution that would help you. Like we talked about earlier, a lot of banks do offer debt consolidation loans that are going to be a significant cost savings as far as interest. So that may be a great option for you. They may know of a local credit counseling agency some of them are completely free and they just give advice. You don't sign up for anything. You don't have to take out a loan. They honestly just take a look at your budget with you. They teach you how to balance your checkbook, reconcile your budget, go through your online banking, whatever that may look like for you. Sometimes that's the best starting place, is just getting help with the basics. So making a budget and balancing your monthly finances. And sometimes your banker can help you with that right there in the branch, and you can do it all within your bank. Sometimes you may have to get additional help. But that's kind of what your banker is there for. And they'll kind of know at least a good starting place for you as to some real world solutions based on your specific circumstance. So I would say that's always a great starting point if you are to the point of needing some additional help, is stop into your bank and just kind of have an open conversation with your banker, and they can find solutions tailored to you.
So maybe my last question here. So hypothetical, say you just got a windfall, $1,000 fell from the sky into your lap. What are you going to do with $1,000 when you're looking at applying it to a debt reduction here?
Well, that's going to depend on which method that you have chosen to go with. Obviously, the snowball and the avalanche don't always go hand in hand if they're different. So, if you've opted to do debt snowball, then you would apply that amount. If it's all extra, I would say you would take a good portion of that and apply it towards whichever way you go. So either the debt with the highest interest rate or the debt with the smallest dollar amount. And then again, and I can't say it enough, take a portion of that, even if it's just $100 and you leave $900 towards debt, put $100 of those dollars into your emergency fund, into a savings account, especially if you have a high yield savings account, get some interest going and then put the rest towards debt. That $100 is not going to make or break your debt journey, but it may be what you need later on if your car breaks down and has a repair and you need a larger savings account. So I would say just put some of it in savings and the rest towards debt, but it kind of depends on which method you use as to which debt you want to put it towards.
So perfect. Those are 7 great strategies for tackling your debt. Give us a very quick recap. What are all 7 of those?
Yes. So you have your debt snowball as well as the avalanche method. Again, you're tackling those in an order, but it's just dependent on if you're going to start with the smallest dollar amount or the highest interest rate. We also have debt consolidation options, such as doing a balance transfer to another credit card, a debt consolidation loan, different options there. Cutting unnecessary spending, which is when you're going to evaluate your budget, see about maybe eating out less subscriptions, things like that. Increasing your income. So whether that's asking for a raise, getting a part-time job, doing some delivery driving on the side, lots of different options depending on your situation, just to increase your income, which of course, all of that extra you can put towards your debt. Automating your payments, out of sight, out of mind. So getting those payments on a recurring schedule, utilizing your online and mobile banking, as well as automating to your savings. Because again, I just want to stress the importance of an emergency fund. Even if you have debt, you don't want to forego savings altogether. So make sure you're automating both payments to your debts and also payments to yourself. Pay yourself first. And then finally, just asking for help and support when you need it, whether that's professionally or just within your circle of friends and family. I just can't stress enough how overwhelming debt can really be, but you don't have to go through it alone. And there are lots of people, tools, resources to help you get out of it. It's not the end of the world, and it's definitely doable and possible no matter your situation, no matter how far into your debt payoff journey you are.
Well, those are 7 fantastic strategies. Obviously, you put together a great piece for the Money and More blog. That's available on ombbank.com. Thank you so much for going through these strategies. As we get out of here, tell me, what are you going to do with the rest of your day today?
That's hard to say, but I see some sunshine peeking out through those curtains. So I'm thinking I need to probably go explore that a little bit and maybe take my lunch outside, sit on the patio, have some fresh air. It was unseasonably cold in Missouri for parts of April. So I'm ready for the temperatures to go back up. And I've been ready for summer since about November. So I think I'll probably just sit outside.
Yeah. So my wife and I were working on a pergola project in the backyard, and the guy we've got doing it needs more stain. So there's another trip to the Sherwin-Williams in my future. It is the best. Well, that will do it for today's Money and More podcast. I hope you all have a great day.
The Money and More podcast is owned by OMB Bank. OMB and its affiliates do not provide legal, tax, or accounting advice. You should consult your legal and/or tax advisors before making any financial decisions.